China's tungsten market after the May 2026. Let's begin with the key conclusion. This was not just a price correction. It was a bubble being cleared out. What happened in China's tungsten market in May 2026 was more than a sharp decline. It marked a deeper shift in pricing logic, from sentiment-driven pricing to order-driven pricing. In the earlier phase of the cycle, prices could rise on expectations, momentum, and trading enthusiasm. But in the next phase, without real orders and cash flow support, expectations quickly become speculation. That is why this sell-off matters. According to market information, major tungsten raw material prices fell back to levels seen at the beginning of the year, or even late 2025. Compared with the mid-March peak, some prices dropped by around 60%, with monthly declines exceeding 40%. This was not a normal pullback. It was a fast unwind of market sentiment. One clear signal is that speculative trading momentum in the middle of the supply chain is weakening. Earlier, much of the rally was driven by short-term trading and inventory positioning. Now the market is shifting from who is willing to chase higher to who is willing to take real delivery. That is a difficult transition, but it is also a healthier one. At the same time, upstream miners and intermediate processors are beginning to defend the floor. They are becoming less willing to sell into panic pricing. That does not guarantee an immediate rebound, but it suggests that the bottom is starting to be shaped by supply discipline rather than fear alone. By late May, some real downstream orders for tungsten powder feedstock also began to appear. This does not mean demand has fully recovered. It simply means the market is beginning to move from watching headlines to watching actual purchase orders. That shift is small, but strategically very important. Another major development is the growing fragmentation of prices across the value chain. Tungsten is no longer priced by one simple market quote. Actual transaction prices now depend on purity, particle size, payment terms, order volume, delivery location, compliance requirements, customer relationship, and end-use risk. In other words, tungsten is no longer just a commodity price. It is increasingly a combined price of material quality, credit, delivery capability, and application certainty. For global high-end manufacturing, this is a critical message. In aerospace, defense, semiconductors, advanced tooling, and energy equipment, the cheapest quoted price is not always the best decision. Stable supply, trusted quality, and reliable execution often matter far more. The lesson is clear. In the next stage of the tungsten market, having material is not enough. Real value will belong to those who can turn material into certainty that customers are willing to order against. And that is the signal the global tungsten industry should be watching most closely.